Data from the Nigerian exchange shows total transactions on the local bourse hit 2.35 trillion at the end of May. Now, this shows a 115.4% increase compared to the first 5 months of 2023. Meanwhile, analysts at Sterling Asset Management and Trustees says strategic positioning of investors on fundamentally sound stocks for dividend income and capital gains remain one of the drivers of the market. Patrick Ejumedia, head of research at Sterling Asset Management and Trustees, joins me now for the first half year performance of the stock market and outlook for the rest of the year. Patrick, thank you for joining us today.
Good afternoon. Thank you.
Let's get right to it. Now, you've done a comprehensive analysis of the half-year market performance. Walk us through the highlights of your review and findings.
Okay, so basically, of course, if you look at what has happened in the markets in the last 1 year, you will see that from as at June last year, the market in terms of basis points, which is the ASI, which is the indicator for measuring performance of the market, was around 60,000 plus. And as we speak now, as at yesterday, the market in terms of basis points was around 99,000 plus in terms of the ASI. And of course, you will see that that growth is about from 18% last year June, to about 32% this year. Yes, the market has grown significantly, about 13% increment from the 18 that it was last year June to about 32 that it is now. But we'll still see that the market is still underperforming because it's still above or below the average of 63, about 63% year on year. So, but of course, the market is still is growing, is kind of growing, like I said, 32% year to date. But year on year, it's still 63%. And that growth, that year to date growth of the market is still below the average. So we can say the market is underperforming.
From an EPS and dividend yield perspective, I mean, how would you, on average, how would you rate key sectors or the market in general? I know that obviously investors usually focus on the most liquid sector of the market, which is the banking. But talk to us, what is to be said about the EPS and dividend yield from that standpoint?
So basically, you want to look at that in terms of the key sectors that the NGS is currently keeping their data. So if you look at that, you see that most of the sectors are not doing, with the exception of the industrial sector that is driven basically by the Dangote cement, whose price has gone up significantly. And that's what is making that sector, about four of them, the Dangote cement, the Curtis, Triple G, and those are the factors that are in that industrial space that are driving the market. And these are the factors that are playing that significant role. But for the banking, we're not seeing that true growth in the banking sector, like you have said. But we know that what's driving the sector, the industrial sector, is the Dangote cement share price that has grown significantly year on year.
Now, I mean, despite the pressure and some of the headwinds, so there are still some stocks that have remained resilient. Now, if you look at the first half year best performers, what would you say they all have in common?
But maybe come back again. Let me get that question again.
For the first half year best performers, what would you say they all have in common? What is the common denominator among them?
Okay, so basically, like I've said earlier, it goes back to the question, to what I said earlier. If you check that, we have about, out of the top 10 sectors or firms that are leading the market in the first half, we have about 4 of them that are from the industrial sector. And so basically what they have in common is that they're in that industrial space, and that's why they're all going together. Maybe they're relying so much on local input to grow. So if you look at Boa Food too, which is the consumer goods sector, Boa Food is topping that chart or driving that sector. So maybe because of the increase in the construction activities in the country, that's currently driving that sector, and maybe pharmaceutical industry space as well. So I think those are the common things because they belong to that same category of industrial sector goods. And that's why they're driving the market at the moment.
Right. Let's talk about the markets and the economy, especially around the reforms we've seen in the last 1 year. We did see market jump a couple of months ago, last year, when those reforms started, were being rolled out. But how do you think investors feel right now? The market feels right now with 1 year after these reforms, from the removal of petrol subsidy, the FX reforms, but then looking at other key indicators like inflation, which continues to climb. How are investors processing all of that?
Okay, so again, if you look at the exchange rates now, or if you look at the trend of the market, you will see that it has been kind of flat, and of course that's because of what, like you have mentioned, what the government is doing to stabilize the exchange rates in the economy. So, and what government is doing basically is to increase the fixed income short-term instruments, the 90 days, 180 days, and 364 days instruments. So, and of course, at the moment, the rate is around 20.68%. And of course, that has a role in driving investors from the equity market to the fixed income space. And that's what we are seeing at the moment. And as much as we currently face inflation and the government is looking at the exchange rate pass-through effects of domestic inflation, we may not see that rate coming down soon. We may see that rate being around what it is, particularly given that the government debt came out some weeks ago and has shown that government debt has gone up from 97 trillion that it was in last quarter to about 121 trillion. So we may see that remaining that kind of high, particularly government trying to stabilize the exchange rate so that they can curb inflation.
Right, but what is your outlook for the operating environment for the market, for players at the market? Especially, well, we know that for the banking sector, the capitalization exercise, that's what investors are keeping an eye on. But just the overall operating environment, what is your outlook?
Outlook, basically, we do not see, because we do not see government bringing down the rates down at the moment. We are proposing that the market may be quiet, basically, for July and maybe for the quarter, because of the rates that is likely to be at the moment. I want to say they affect the performance of the banking sector and maybe overall the overall markets. And like we said, because the rates are still high, we still expect people to leave, investors to move away from the equity market to take advantage of or to take position of the fixed income space.
Right, Patrick, thank you so much. We're going to have to leave it there. Thank you for talking to us today. Patrick Ejumedia, Head of Research at Sterling Asset Management and Trustees.